Ladies and gentlemen, welcome to another episode of the Let's Hash It Out podcast, your one-stop shop for innovative tech, blockchain, and cryptocurrency. Today, I have Sean and Guthrie from the company Node40 to discuss crypto taxes, and they're going to be breaking down what you need to know about crypto taxes and the tool they've developed to make crypto hodlers' lives much easier. So without further ado, let's hash it out. All right, guys, welcome back to the Let's Hash It Out podcast. Today, I have with me Sean Ryan and Guthrie Isaac, and I wanted to introduce them, give them a chance to tell you what they're up to.
Sean Ryan here, and I'm the CTO and co-founder of Node40. We've been around for about 5 years now, 4.5 years, and we started off doing one thing, and we ended up in the accounting world. So we've been doing that for a number of years now.
Awesome. Guthrie, do you want to add to that, sir?
Yeah, Guthrie here. I've spent the last few years working as a consultant with my company, BPI Consultancy. I got into the crypto space just a few years ago and have been working on some pretty tough accounting problems that I felt were pretty exclusive to a specific client, but found out they were problems that plagued crypto companies in general. The way I found Node40 was vetting solutions, working closely with some pretty top tier accounting firms to find those solutions that could really serve enterprise customers with crypto in their operations. But time and time again, gaps were too material to really make use of. Finally found Node40 and we just totally aligned right away. I currently serve as their chief strategy officer outside of my consulting firm. And today we've made a lot of progress in being able to build and solve problems for folks that really are suffering and need that guidance. Looking forward to covering some of that in more detail today.
Awesome. Yep. And so if you guys haven't picked up yet, we are going to be talking today about crypto taxes. So we've got a lot to unpack. So let's go ahead and kick it off. So for folks on this podcast who know nothing about crypto tax policies, either from the personal perspective or if you're in business, it's even more complicated if you own a crypto-based business. So what are the key things people have to know at a high level if they're just getting to an understanding of what the world is like from this regard?
Right. So it's funny. I like Guthrie to take the piece about how businesses would handle taxation.
Right.
But I can tell you that there are a couple of key things that everybody should be aware of. One, it's okay to be confused. All right. This is a very confusing sector. And it's not just because taxes in general are confusing. It's because cryptocurrency taxation is confusing due to the IRS's lack of clarity on it. Now, I know they've released some guidance in 2014, which was wonderful for 2014, but technology evolves and it always evolves faster than regulation. But in this case, it's evolved to the point where there are certain questions that remain unanswered. You can't even, there's no gray area there. There's just simply no answers. And that's hard to deal with. So number one, I'd say definitely it's okay to be confused. Number two, I would say seek expert help. And when I say expert help, I don't mean go to your accountant and ask them about cryptocurrency. Go find an accountant that knows cryptocurrency. Not all accountants understand it, and they push off to those that do. There are lawyers out there that specialize in digital currency tax law, and I know some of them. They're brilliant, and they're really fun to talk to. So there is help out there. So that's number two. And number three is arm yourself with knowledge, right? And that's you. This is what I've been doing for years, and now I know this is not practical for most people to do, but this is my business. So I'm constantly reading about the state of the regulatory industry. I'm listening to accountants, and I'm listening to regular consumers, day traders that are saying, "This is my situation. Help me." And so I get a lot of input from a lot of people, and there's always a common theme. It's confusing. Who do I talk to? How does this work? And that's what we try to do at Node40. We provide those answers to people, give them a level of comfort. People like comfort, and that's what we have to offer. But Guthrie, he comes from at a different angle. He is helping businesses deal with the digital currency world, and actually that's why we paired up together to help combat the complexity on the business side. So Guthrie, if you have something to add there, that'd be great.
Awesome.
Surely, yeah. I think you touched on a lot of strong points there, and the level of confusion is everywhere. It's the IRS is confused. I'll just say it. Everybody's confused. I attended recently a blockchain conference for accountants and auditors in New York City, and the experts, the pros in their domain, dealing with fiat, like they know their stuff. They know how to do a SOC 2 audit. They know how to follow ASCPA, PCAOB guidance to the T. But I'll tell you, there was a clear sense of uncertainty among every single person there. There was nobody there who had this in the bag. And that's generally the position you have to take as a business owner who wants to be, wants to get ahead of the curve here, wants to find ways to make crypto useful, wants to, be a cutting edge service provider in various regards. But so many things come up new every day, like tricky situations, and the best we can do is find folks or make decisions in a way where you can support your assumptions in a conservative manner in some cases. Other cases, as long as you can feel like AICPA will likely move in this direction in a couple of years. Once the IRS gets their head wrapped around these complexities, they will likely move into this direction. But some of the things I've seen, and just to give you an example, it's a tough call. One of my favorite examples is a company that I've worked with who has a lot of elements of an exchange. They manage a lot of customer assets. And when you think about holding, a customer's Bitcoin, you have that balance on your books. You know what your liabilities are. You can track it. You can do the usual thing. But what happens when that Bitcoin gets forked? Mm-hmm. Are you going to go and engineer your way into allowing your customer to be able to get that asset? That takes time, and there's tons of forks. If you don't do that, you essentially could have millions of dollars sitting there. And if you follow FinCEN rules in the state of California, for instance, if you are a custodian and you come across some funds that you don't know who they belong to, or you can't reasonably provide to the customer, you have to send it to the Sacramento, and they'll deal with it. Right. But are you really going to try and send dozens and dozens of forked assets over that way? So just kind of in summary, give you a highlight on the position we took. Essentially, if the company was not willing to engineer a way to provide those assets to their customers within 1 year, they would simply ignore it. They wouldn't put it on the balance sheet. And from an ethics perspective, they wouldn't touch it themselves. However, if they were willing to provide that access within 1 year, it would go on the balance sheet, and customers would be notified, and we would ensure that we follow through with that as stated. So yeah, there are tons of interesting examples like that, but at the end of the day, you really just got to get comfortable and really support your decisions in a way that, when it comes to it, can you defend yourself?
Right. And I think that's the challenge of being in this space right now, is that even as a consumer and as a business, even with the professionals that are, really on the bleeding edge of this, a lot of it is guesswork about how things will be evaluated. There's not really necessarily a well-established precedent on a lot of these things. So it's a judgment call. And that's why, at least in my personal situation, dealing with taxes on crypto, I'm not a trader per se, so I don't have that volume. But even just a few transactions in a year is very confusing and stressful for people. I speak for myself when I say it's very stressful. And I'm sure many other people listening to this feel the same way. So, with the rules that aren't clear and the difficulty with infrastructure not there to give you a nice statement that tells you what you have to put on your tax return, what tools do you guys know of that are out there to help people with this problem?
Yeah, this is a good question. So if you look back, I guess don't go it alone, right? Don't try to do this yourself unless you truly are an expert in this area and you feel confident that your decisions are correct. I mean, obviously, a lot of people doing this themselves, but I don't recommend it. Maybe that's biased, but it doesn't matter. There are professionals out there that have been dealing with this for years. So the evolution of Node40 Balance, which is our product that handles this, it came out of a personal need of myself and my co-founder, Perry Wooden. We were accepting digital currency as payment for our invoices. So we had a business need to understand how to pay our taxes. We were new into the entrepreneurial world. We wanted to abide by all rules. And when we went to our accountant in the early years, he said, okay, we have all these invoices paid to us in digital currency. What do we do? And obviously, confusion. Like that's the go-to answer. I don't know, or I know enough that it's property. So just to cover our own liabilities, I went back to the office and I just dove into the property laws and the IRS codes that affect property and how that it works. It's basically bartering, right? So I wrote an internal application to handle our own internal needs so we could file properly. There was the motivation behind the product was not, hey, I want to make money. The motivation was, I want to stay out of jail. So our product is focused exclusively on doing it the right way, and we lean in a more conservative way. Now we've tweaked it so you can choose to be less conservative and take a higher risk, but ideally the defaults are it's a conservative perspective. So if you want to feel comfortable about your taxes, if you want to feel comfortable that you've calculated things the proper way, what you really need is a printout, or maybe it's a PDF, but a printout of your activity. I bought here, I sold here, I moved it over here, I exchanged it for that, dates, times, and then you assign US dollars. Really, that's once you get out of the crypto world and into the US dollar world, it becomes more familiar to you. And that's what our product does. It goes from virtual currency, it gives you a virtual currency representation of your taxes, and then it converts all of that line by line, piece by piece into the US dollar equivalent that you can just hand right over to the IRS agent who's going to be auditing you if you're ever audited. It's just that level of comfort is what we strive for. So you want to make it less stressful? Make sure that you understand what you did so then you can articulate that to the IRS.
Right. That makes perfect sense. And to the point that it's a full process of going through and evaluating each individual time you moved crypto, you exchanged crypto for another, et cetera, all those sort of cost basis processes.
That's right.
That affect property, keeping track of those throughout the year. So do you guys have strategies or recommendations in place for people to do that throughout the year so they have enough in place as a system to go into tax time?
Yeah, avoiding taxes or minimizing your taxes or being able to estimate your taxes really comes down to understanding your trades. So if you're educated on January 1st, your entire year ahead of you is based on, okay, how is this going to affect my bottom line? Oftentimes we get customers coming to us in January, February, March to talk about last year. I'm like, well, you've already traded. So what we can do is we can tell you what you did, but ideally you would have been behaving in such a way to understand your tax liability to begin with. So as far as strategies go, understand what is acceptable from the IRS perspective on property. There are competing opinions out there, whether FIFO is acceptable, whether LIFO is acceptable. There's a whole host of other inventory control mechanisms. But what we focus on at Node40 is, yes, all of those, but plus what I think is the gold standard is specific identification, which means that, it is a very simple example. Let's say you buy you acquire one Bitcoin every day for 7 days. And then on the 8th day, you sell 5 of them. So the question becomes, what's my tax liability? Well, did you sell the first 5? Did you sell the last 5, right? Is it FIFO or LIFO? Or did you sell something in the middle? You sold one on Monday, you sold one on Tuesday, you sold one on Thursday, you kept the one on Wednesday. That's specific identification. And knowing what you're actually trading can help you understand your tax liability. And knowing that ahead of time is important. And that's why at Node40, what we do is we have an unrealized gains report, which tells you here are all the pieces of your digital currency that you haven't spent yet. And if you were to spend them, here's how much gain or loss would be on them. So you can actually use that to say, oh, in that case, I want to sell this piece and this piece because that's going to give me a loss, but I don't want to sell this piece over here because that's going to give me a huge gain. And it really comes down to the information that you have in order to make good trading decisions.
Gotcha. So when, as a user of Node40, just give me an overview of your product, how it works. Is it something that you use throughout the year as a consumer or as a business, or is it something that you come to it near tax time?
Yeah, there's two camps, right? There's the camp that just wants to pay their taxes every April, so they're going to come to us usually around March. I mean, we see a massive spike. We have various spikes throughout the year. The biggest one is always in March. And it's so stressful for me, right? As an owner of the company, I'm like, okay, we just got an influx of customers. We have to make sure we're up and there's no bugs. So there's that camp that just wants to pay their taxes. But then there's also a significant camp of people that use it throughout the year, and that's due to wanting to understand their estimated taxes at any point in time, right? The more insight you have into your tax health, your financial health within your own portfolio, the smarter decisions you're going to use, right? It's akin to having a portfolio at a brokerage. Every once in a while, you can log in. Most people log in to check how much money they have, right? But sometimes if they're about to, sell a bunch because they want to, I don't know, buy a house, buy a car, something, usually they just reach out to the broker. Hey, what should I sell in order to get this? We don't have that here, right? You are your broker. You're the person who has to have all the information. So using products like Node40 helps give you that information to help you guide your decision-making process. So yes, it's a year-round product, and then we have some people that use it just once a year.
Awesome. So, to start using it, what's the process to get signed up? What information do you need to provide to get in that? And fill me in.
Yeah, virtually none. We know the space, the cryptocurrency space, especially when we got in there. It's a lot of people that took privacy really, really personally, right? So
definitely,
in order to sign up and create an account with us, we need an email address. That's it. And it doesn't have to be your name at yahoo.com or gmail.com. It's usually something obscure, and that's the only information we need about you. Aside from that, we do need your trade history, right? So you have to import your trade history into our system. Now we make it very easy for linking to exchanges. Some exchanges are much better than others. Coinbase is an outstanding exchange to do business with from a technical perspective. There are other exchanges, which I of course can't mention, that are horrible to do business with because their exchanges are their APIs are just simply garbage. But there's nothing we can do about that. All we can do is try to ease that process. So you either linking an exchange through like an API key or signing in through OAuth. In some cases, there's no automated process, and you have to go to the exchange, export your data, and use our system to import that data. But the nice thing about our system is once we have all the data, then we can start linking different sources to each other, because it's important to realize that there are taxable events and then there are non-taxable events. A taxable event is when you exchange one currency for another, Bitcoin for Ethereum. Now, I understand that is a very hot topic, and some people feel very strongly that what I just said is complete hogwash. But regardless, right now the IRS is considering it taxable. So let's just assume it is. Okay, so taxable. When you dispose of it for cash, that's taxable. What's not taxable is if you buy digital currency on an exchange and then bring it down to your personal hardware wallet or to other wallets that you control, software, paper, whatever. That's movement from one place that you own to another place that's not taxable. But it's important to realize the cost basis gets assigned when you first receive that digital currency. And then as you move it around, that digital currency, that cost basis has to continue with you, right? Now it gets really tricky here because when you do move digital currency from one wallet to another wallet, to an exchange, there's always that network fee, right? So there is a tiny piece that you're giving up. So if you buy one Bitcoin and you bring it down to your wallet, you're not going to get one Bitcoin in your wallet. You're going to get 0.99999, right? So you're going to get a tiny piece of Bitcoin. No, I'm sorry. You're going to get a big piece of Bitcoin, but the tiny piece is you literally are spending it. You're disposing of it. So you can consider that there's going to be a gain or loss on that little fraction piece. And that's what we track. Whether the IRS cares about that, I don't know. I care about that. Remember the origins of Node40. So I stay out of jail, right?
Right. Yeah. Especially, from a business perspective, and Guthrie, feel free to jump in here. Keeping track of your balance sheet and keeping track of all the important stuff in terms of reporting is even more important from a business perspective because all those things are very, very tightly controlled and monitored. And so if you're accepting crypto within your business, all those cost bases and things have to be tracked even more tightly than I would say even a consumer.
Yeah, I'd like to touch on that and the power of the cost basis tech that Node40 has really can be leveraged whether you're an individual who feels, I've made plenty of money this year. I can bear the burden of a extra tax bill, or a company, like a company, a CFO being able to see what their options are and being able to legitimately track and just shift assets around. If you got a bad year and you need a little bit of a tax benefit going on, yeah, you have the freedom to do that, and it's really important. And there's definitely, the more your business gets involved, or even as an individual, the more you're exposed to crypto, the better your financial optics are. Like the more likely you'll be able to make far better decisions and how to mitigate risks of issues ahead, or prepare for an array of different types of uh, uh, life events that you otherwise wouldn't really have any control over if you just simply look at your crypto and file once a year. I've gone into some clients where literally about 5 years of being in business, they've had no real understanding of their financial optics, and they really just got by because their crypto assets, which they're mostly exposed to crypto, have just exploded over the last few years, and their business really got by on that, and they felt convinced that they were profitable, and everything was fine, and all it was all dandy. But I spent about 6 months there restructuring their crypto accounting, finance and accounting infrastructure, and we realized really what's happening here. There was some unintentional dipping in customer assets. There was a misunderstanding with regards to what was actually revenue and what wasn't. I'm sorry, I broke up there for a second.
No worries.
But what I was getting at was uh, finally being able to get a grip on your financials with such exposure in crypto proved really critical for this company in particular. Once we found out what their runway was, once we figured out what their burn was, what their true expenses were, what their true liabilities were, we made some pretty big decisions to restructure the organization to where today, they're doing very well. They made some really smart decisions, and it was all because they built out their financial optics using technology like Node40 and using best practices that are being developed by the experts out there. That best practices may not be fully vetted, but in their purest form, are proving to be repeatable and useful across companies as we go on.
Awesome. Yeah, and I think that's one of the big tricks here is that I think people don't. It's almost like you avoid paying attention to it because it's a difficult, confusing, and stressful topic. So throughout the year, you're like, I'm just going to make this trade and I'm going to do it blind and I'll figure it out later, right? And for people that do volume, that's dangerous. But also for people who don't do volume, it's still dangerous because it could be the difference between several $1,000s in taxation between one decision or another.
That's right.
So that's definitely the value prop for something like Node40. Is to have something to help you make those educated decisions. Am I right on that?
Yeah, that's really important. Knowing what you're going to be facing down the road is very helpful when you're making a trade.
Gotcha. So I wanted to touch on the actual policy side or the law side of how you make decisions in crypto. So for people listening that have crypto, that are trading crypto, how can they help avoid paying that max tax bill at the end of the year
Oh,
by
right.
leveraging certain strategies?
Yeah, that's the good question. So I referenced it before, the unrealized gains report. This is what your current holdings are for every single piece. As you move currency over and over again, you spend currency. What happens is you spend a big chunk and then you get a lot back as change, right? So if you have 1 Bitcoin and you're going to buy something that's zero point 0.2 Bitcoin, you're going to get 0.8 back as change. So you have these they're called unspent transaction outputs. All the things that you have that you haven't spent yet. So as you use digital currency or collect digital currency, your UTXOs build up. So you have lots and lots and lots. Even though if you have I have 1 Bitcoin, but it consists of 300 UTXOs. That's what I'm talking about.
Yep.
It's important to understand that each one of those UTXOs has its own unique cost basis. And when you spend each one of those UTXOs, there is a different tax liability for each one. So you take a single transaction that you're spending, 1 Bitcoin. If that 1 Bitcoin is made up of 300 UTXOs, you literally have 300 microtransactions, each with their own gain or loss. So one transaction can have both a gain and a loss. It's kind of an interesting phenomenon, but that's because of the way we think about a transaction, where really we should be thinking about the microtransactions that comprise that major transaction. So that being said, if you know what the cost basis is of each one of those UTXOs, you can look at them and say, well, I have to spend 0.2 Bitcoin. So I'm going to spend this one, this one, this one, and this one, and this one, because that's going to give me a loss. And so knowing where you stand, that those optics that Guthrie was referring to, the more optics you have into your own holdings, the better decisions you're going to be making. So if you know you have to sell Bitcoin in order to pay your tax bill or to do anything, to buy a car or house, like I said, and then it's really important to know what you're going to be selling, because you might need to be selling a heck of a lot more just to cover the taxes at the end. Right. And that's, tools exist to do that. And I shamelessly keep coming back to Node40 balance, because that's a tool that we use in order to make those decisions. We dog food this stuff. We use our own tool to make our own financial decisions when it comes to digital currency.
Right. Yeah, and I think that's, first of all, it's a good vote of confidence for what you guys have to offer. That being said, so what is, for someone who might want to use Node40, right? Pick it up. I know we're well into the year for taxes, et cetera, for 2019. But if someone wanted to use that, what is the cost model for that service? Is it a monthly fee? Is it every time you generate a report? So where do we stand on that?
Right. So first, I wanted to touch on a point you said. We're well into the tax year. We are, but most people file extensions for digital currency to then say, I'll buy myself 6 months. So that's actually coming up on October 15th. So right now we're seeing a small spike that's going to grow over the coming weeks for users needing to figure it out now. They pushed it off. Now they have to pay the tax man. But the pricing model is yearly. Yeah, no, we don't want to be bothered with monthly. It's confusing. It's a lot of work on our end. So no, we have various tiers. So you can get in for free. So if you want to see if it's even going to work for you, we offer a free tier. Because if you pay a bunch of money up front, it doesn't work for you, then we have to issue a refund. Nobody likes that. So get in there, use the system. It's very limited, the free version, but it's enough to know whether it's going to work for you. And once you've made that decision, you can buy the package. It's $75 right now for the year. And that's going to give you just about everything you need as a retail consumer. But if you're a high frequency trader, or you have needs that go beyond your standard taxpayer needs, we have a professional version. I think we call it unlimited version. That's right now going for $225 a year. So these prices are. We did a full tax year of price discovery, and we feel like we offer a very competitive, fair price, and we offer things that more beyond just a product, more accessible. You can call us up. Literally, there's a phone number on our page. You can call us up and get a hold of somebody.
Right.
And in fact, tomorrow, I'm not going to say who, but I'm talking to somebody who just wants to know, did I do it right in the last year? I'll talk to you and tell you if you did it right according to the way our process works, and then you can decide if you want to use the process. So it's the customer service is just top notch. We pride ourselves on that.
Awesome. That's definitely good to know. So, I mean, for anyone that's listening right now that feels completely overwhelmed with the taxes, I've been there, and I actually still am there, because crypto keeps changing, and I actually avoid making trades sometimes because I'm not sure what the implications are. So I think having a tool like this is very powerful, to have that knowledge before you make that trade, what the implications are. But I did want to touch on one other point that was interesting on the tax front, and that is that I'm sure many people saw that the IRS sent out letters to its seemingly random group of people. I think it was probably more likely people that were on Coinbase early on, that ended up being exposed through that avenue. They sent letters out to crypto holders, and Canada has also done the same thing. So what are your thoughts on that in terms of what that means for other people who didn't receive that letter but know they have crypto?
Yeah, I do have some opinions on the letters. I feel like Coinbase is kind of often used as a punching bag, and I feel bad for them because in this case in particular, I would say these letters did not come from Coinbase customers.
Interesting.
I'm sure many of the letters were received by Coinbase customers, but Coinbase is not, and this is important to note, not the only source of data going to the IRS. There are lots of exchanges. So Coinbase may be the most famous because they were issued the John Doe summons, but really other exchanges kind of freaked out when Coinbase was served. And Coinbase did what exactly they should have done. They went to bat for their customers and they tried to negotiate with the IRS and said, no, I don't want to give you everything. Let's see if we can give you a subset if you insist. And so they did broker a deal where they got a subset, and we'll talk about that in a moment. But the other exchanges jumped on board immediately, said, well, I want to get out in front of this. And so the agreement that they made with the IRS, Coinbase, was to issue 1099-Ks to the customers who qualified for 1099-Ks. Now, in order to qualify to receive a Form 1099-K, which is information reporting only, it has nothing to do with your tax liability in a sense. It's just letting the IRS know and you as a customer know what happened on an exchange. So the 1099-Ks would be received by people who had taken part in at least 200 transactions and $20,000 worth of received value in US dollars. So that was a much smaller set. So the other exchanges got on board. They started issuing 1099-Ks as well. I know of one exchange at least that has decided to go beyond the 1099-K and into the 1099-B realm, which is probably a more accurate representation of what happened within that exchange. So they've decided to go with I think the country's largest 1099 filer to issue 1099-Bs. More expensive, but it's more comprehensive, and they believe it's more accurate. So they're way ahead of the curve on that one. But as far as that's who I think got the letters. People with anyone, just because you have Coinbase in there doesn't mean it was Coinbase's, the genesis for the letters were from them. The letters themselves are scary. All right, I would be very concerned if I received a letter because the IRS is essentially singling you out and saying, we're pretty sure there's something going on. Now, I don't like that about it. I don't like that the letters do not definitively say, this is what we know, this is what you should owe. They're saying, well, we think there's three versions, first of all. One version saying, we think you don't know how to pay your taxes. Another version says, we think you know how to pay your taxes, but you probably did it wrong. And the other version says, you probably did something wrong, and you have to respond. And
that's interesting. I did not know that.
Yeah. Oh, yeah. The letters are letter 6174. That's the we think you don't know what you're doing. Letter 6174-A is the one that says you tried, but we think you got it wrong, but no more information. Both of those you do not have to respond to. All right, that's just them. That's really a scare tactic. But the third letter, that's the scary one. Letter 6173. That's the one that says we're pretty sure you did something wrong here. We don't have any return of yours from 2013 to 2017 that shows that you're reporting any digital currency. But we know you have digital currency, or at least we think you do. So the letter does give you the benefit of the doubt. It says, well, all right, if you think you did it right, sign this affidavit, write us a letter, give us a narrative, and explain what it is you did, and give us your trade history because we want to verify it. And then they say, and then you sign this under penalty of perjury that you're not trying to do anything nefarious. And then you send that in and they say, well, we're going to check this against your bank, your financial advisors, and what was the other one? Oh, other sources of information. So we don't know what other sources is.
Yeah.
I don't really know how they know who your financial advisor is, but it's definitely scary. If you get this letter, I would be very concerned, and that's when you definitely want to reach out to companies like ours. Even if you don't use ours, just reach out to somebody.
Right.
Inside the
my
letter.
next question is, what do people do if they receive this letter?
Well, if you don't mind, I'd like to add to that real quick. It's in my opinion, it's a pretty bold move by the IRS, and there's a scary side, and there's also like, what's really going on here. I mean, I imagine they're putting a lot of resources in being able to try to identify those who may be not totally in line with what they should be doing from a tax perspective. But at the same time, like if Coinbase sends a document about my financial position from a crypto perspective, that's only like a tiny piece. Like I could be all over the place. I really want to see how the IRS tries and tackles this. And it's so unknown with regards to where they could be. But I mean, the truth of the matter is, if we think about the Binance hack that happened, even today, we're still seeing that massive amount of crypto that was pulled and just like trickling through the system, trying to get in on exchanges without being noticed. But there is that clarity there, but it's also really hard to get that total picture. I mean, I will say that I work with a lot of folks, and even with very forthright, conservative, and honest citizens out there, it's even hard for them to get the total picture there. So yeah, I definitely think it's a scary letter to get, but I'm also curious as to how the IRS is going to try and solve that problem of legitimately getting that total picture.
Yeah, for sure. Guthrie, thanks for bringing that up. It really comes down to how you use multiple exchanges, multiple wallets. Having information from one of those, Guthrie's absolutely right. It's a tiny piece of the picture. And that's why, because I use multiple exchanges, my company uses multiple exchanges, and we have hot wallets and cold wallets. We put that all into kind of one ecosystem, and we track movement from around. So when the IRS says, well, we think you owe this because this is the one piece of picture we have, say, well, no, here's the missing pieces over here that you didn't have. And you can track it on the blockchain. That's the beautiful part of Bitcoin or blockchain in general, is that you can point to a public ledger which is immutable. And you can say, listen, look at here. I'm showing you. This is the trail. I'm not making this up. And that's what's really nice. That does give some level of comfort to people who are receiving these letters. As scary as they are, you still have to do something about it. You can't ignore them.
Definitely. And so the recommendation then is, of course, to go and find not just a professional, but someone who is a professional in understanding and advising on crypto taxes, right? Because it's a niche skill.
Yeah, there's nuances, and I can give you an example from the letters. I have all the letters. You should see my table right now. The letters allude to pieces of answers to questions that have not been answered. So if you look at the 2014 memo, they tell you that, well, they don't speak to whether an exchange of one digital currency for another is taxable. That's been an outstanding question that people have been trying to answer for a long time now, many years. So we know that Section 1031 of the IRS code, which says, property transferred for like kind, that's like kind rule for another piece of property is not taxable. In 2018, that changed, and they removed any ambiguity, and they said, listen, it's real property. So when you transfer real property for real property, that is a like kind event, and that's not taxable at that time. You can defer liability. But the question is, before 2018, were trades for Ethereum for Bitcoin, were those taxable? Did that apply? Did the like kind rule apply? Lawyers in law firms that are quite well respected, accountants in law firms that are talking top 10 here, they feel like they can make an argument. Some feel like they can make an argument that like kind rule does apply. So if you look on our website, we do allow you to opt into a like kind calculation. But now these letters, they just drop it in there, and they say, for example, a taxable event is when you transfer from Bitcoin to Ethereum. That is taxable in these letters. So they've dropped in these little pieces that most people don't recognize. They don't say, oh wow, they just dropped the bombshell here. Well, in my mind, that's a bit of a bombshell because now they're making clear or clearer a point of contention. So, and then there's other ones too. Look at. So we know people are getting 1099-Ks, right? So if the IRS has made an agreement with the exchanges to accept 1099-Ks, then why do each one of these letters talk about Schedule D? Schedule D is for reporting gains and losses of capital assets. Well, where does the data come from that goes on Schedule D? Well, that comes from IRS Form 8949. Where does 8949 come from? It comes from 1099-B, not K. You can't do anything with K. So the IRS is kind of contradicting itself by issuing these letters and accepting 1099-Ks from the exchanges. I understand why they've done it, but it's just confusing people.
Yeah, no, that is mind-bending because then, I think that's the big difference here is that people don't understand, even if you didn't receive a letter, like if you didn't receive a letter, you still want to understand why people did.
Yeah.
And you want to understand what those letters mean so that if for some reason you were to receive one and we don't know whether or not more people will receive them.
Well, the IRS,
all about.
The IRS says that there are going to be about 10,000 letters issued by the end of this month.
Okay.
Now, they say, I forgot what the wording was, but they didn't say 10,000. They said about 10,000. I don't know.
Interesting. Cool.
Their number.
Yeah. Naturally, you would look at that and say, well, that's a small number compared to the total number of people who we presume have been involved in digital currency.
For sure.
But it's a large number in terms of just how many people are now going to be asking questions that we don't really have answers to.
Yeah. One question is what happens to my trades before 2013? I mean, look at the letters. They clearly say we don't have tax information, but for at least one tax year. They couldn't even tell you what tax year, but at least one tax year between 2013 and 2017. Okay, IRS, what Bitcoin's been around since 2009. Was that all tax-free from 2009 to 2012? Like even that, the letters just inject a bit of confusion into the system.
Yeah, definitely. No, and I totally agree. So, I mean, I think as we've kind of unpacked all of the stuff that's happened with the IRS, what they have said, what they haven't said, Congress is another interesting place where crypto is being discussed, right? So this morning I read an article about Congressman from North Carolina, Ted Budd, who put a new bill out there that's basically a make taxes clear for people act, if you will. And so it would end double taxation, handful of things. I know we've seen some of those bills come through and end up dying pretty quickly. Yeah. Do you think we're going to see legislation coming through that gives at least a little bit more clarity in the next X number of months?
I think we have an inherent lack of understanding of cryptocurrency within Congress. And I understand why. It's not their fault. I mean, it's a complicated topic. But yeah, the piece of legislation you just referenced, I mean, that it doesn't make anything clear. All it does is trying to say the like-kind rule does apply. But it's going to make it apply from the date the act is enacted, not retroactively. So you still have the big question of what happens retroactively. And it looks like there's a sunset clause in that bill for December in 2024. So it looks like it's a stopgap. There are other bills out there that I think are really good. I think the Safe Harbor Act, I can't remember who put that forward, but the Safe Harbor Act is nice. It's saying, but it's limited. It talks about only forked currencies. So if you are a recipient of a forked currency, then it doesn't matter what you do because the IRS hasn't told you yet. So there's a safe harbor saying until the IRS makes clear what these problems are, you're not going to be criminally liable for misreporting because we haven't told you how to report. That's a good bill. I'd like it to go a little farther and say not just forked currency, but all digital currency taxation. There should be a safe harbor until the IRS comes out and says this is how you do it. I mean, that seems like It's only fair.
Yeah, and that's.
Yeah. I mean, I'll say too though. The point that Sean made. There's just a general lack of understanding. In my day to day, I am in like the middle. Like I'm I'm around, surrounded by brilliant blockchain engineers, brilliant talent, folks that really understand it. Some even that I would say have a present day understanding of the internet back in the 90s. It's mind boggling, some of the things that are on the horizon. Whereas, accountants and folks who, do, lawmakers and folks who aren't those blockchain engineers, but they are responsible for developing that guidance and developing those rules and codifying what we need to take into account to really have that clarity. Huge disconnect, absolutely huge. I mean, it's funny, like the blockchain engineers who do know it so well. I often find that they don't even consider problems or even understand the problems that these lawmakers and are trying to hear. They're both, they kind of think that accounting and auditing, it's already been taken care of. There's no need for it anymore. But that's not necessarily the case because the broad population doesn't have that kind of understanding. So, I think for there really to be true clarity and some solid guidance provided, it's going to take quite some time because lawmakers and regulators, they don't make decisions based on some information. They have to really understand it because they are fully aware of the implications of how big a decision is. If you're guiding the entire population of the U.S., like you've got to be really careful. I know there's discussions about should we allow a Bitcoin ETF to exist? Should that happen? And a lot of the comments are, well, there's no real motivation to let it happen because if it did happen and it went great, then we probably wouldn't get the credit. But if it happened and it didn't go great, then we would get all the blame. So there's a lot of folks out there that who are making these decisions and are trying to wrap their heads around it to ultimately provide that clarity that we're all asking for. But I just think the gap in understanding is so far, and I would be surprised, honestly, that maybe a crazy estimate here, but 5-10 years even seems like a long too soon for real clarity at the top from the regulators to give that to us.
Do you think we'll see it end up being more on the side of legislation comes out now that ends up having to be repealed or changed later on, or do you think it's going to be a slow burn to try and find the correct thing before it gets passed into law? Just your opinion.
Yeah. I mean, if something finally does come out, I nothing in me feels like it's going to be anywhere close to perfect. I mean, I think generally, things change, things evolve. There's updates every year. AICPA dumps new stuff on us all the time. But I do see, like, as with the volatility of the asset in general, I think the regulation, when it finally starts coming out, will be volatile as well. Especially considering that the blockchain technology and crypto. I mean, these solutions are they're all evolving as we speak. They're changing every day. So yeah, if in 5 years we get some kind of clarity finally, I think it'd be far from the final version after that point.
Yeah,
right.
I agree with that. It's complicated, and I just know when legislation or even the IRS guidance comes out fresh and new, I'm going to read it and I'm going to be frustrated. I know it. There's nothing's ever going to be perfect.
Gotcha. Yeah. I mean, it's difficult too because you guys brought it up. If you've even if you were in the space in 2016, a lot of people started coming in 2016, and then 2017 is when it all blew up for people that had no idea, but are in the game. A lot of people are still kind of standing there holding the bag from 2016, 2017. They made no trades. They're kind of sitting on it and trying to figure out what to do. I think, how do you sort of break down when your cost basis may be from years ago? Is that something that's easy to manage in a tool like Node40, or is it something that you need to really dive a little deeper into when you have multiple years spanning of those UTXOs?
Yeah, no, it's that's what the tool is for. The
Perfect.
Node40 balance is built to answer those questions.
Yeah, and I'll add to that. Sorry, the more that tool. I mean, having that in place, the sooner the better. I mean, at the end of the day, I think as long as you have great transparency, and I can't say it enough. I love the spec ID push here, and I think that's ultimately what would be most accepted by the AICPA going forward. But as long as you have a clear sense and like you can get all your data aggregated in one place and you can show you made an honest best guess here, I think you'll be fine. But
Right.
it just would take a little time, a little bit of an investment to get things set up. And I think build your case, and whether you're an individual or a business, I think uh, that's your best bet here. And then as far as new rulings that do come out, I do feel generally, as long as you're not doing anything crazy, if this 1031 like kind exchange, for instance, if some ruling does finally come out, I think these rulings will be more forward looking and they'll be forgiving on past classifications. So yeah, I think in summary, just make sure you got a clear picture as soon as possible, and yeah, I think you'll provide yourself some assurance that will come in handy when the time comes.
Gotcha. Yeah, and I think that's defense is the best offense in this case. So just to wrap this up in a neat little bow for people that are listening that may be thinking now about their own tax situation, kind of in a rapid fire manner, in your opinion, is there a real benefit to FIFO, LIFO? Can you guys give a little bit of a synopsis of where those different strategies apply and what they are how they're thought of maybe in the industry?
Yeah, I'll say my thoughts, and then Guthrie will probably say better thoughts. I think with on blockchain transactions, when you're talking about UTXOs, I think Spec ID, specific identification, is really the way to go, because you really are, whether you're doing it or a wallet is doing it for you, you are choosing which UTXOs are going to be factored into a transaction. So you can't make an argument that you're using FIFO. I'm sorry. Okay, I probably just upset a lot of people listening. You can make an argument, but it's harder to make. I mean, especially when you're saying this is the piece I'm moving over here, but you're treating the piece as something else. So Spec ID, when you talk about on blockchain, UTXO-based blockchains, then yes, that Spec ID is the way to go. There are blockchains that are not not UTXO. Look at Ethereum, for instance. Ethereum is account-based, yep. Right? So then when you talk about account-based experiences, whether that's on blockchain or through an exchange, because exchanges, they're not dealing with blockchains. Exchanges, this is something a lot of people don't recognize, is that when you buy a Bitcoin on Coinbase, you didn't buy anything. What you bought was a promise that Coinbase will eventually give you a Bitcoin if you ever want it back.
Yep.
But imagine a situation where you buy a Bitcoin on Coinbase, hold it for 2 years, and then sell it. That Bitcoin never, ever existed, right? So until you withdraw it from Coinbase, it doesn't exist. So that being said, those account-based and exchange-based sources of your transaction, you can choose FIFO, LIFO, HIFO, LOFO, these whatever crazy strategies. We support many of them.
Yep.
And you would want to do this in certain cases. One example would be a common use case is I buy or somehow get a piece of Bitcoin. I bring it down from an exchange into my hardware wallet. At some point, I'm going to want to cash that out for whatever reason. I want to buy something. I need to pay taxes. I need money. Mm-hmm. So I transfer it up to an exchange, and maybe I'm using some altcoin. So I got to transfer it to Bitcoin. Then I take that Bitcoin, move it to another exchange that my bank account is linked to, and then I cash out, right? So that's a very common use case. Buy a Bitcoin, send it down to your Trezor or Nano or whatever, bring it back up to an exchange, change it to Bitcoin. I'm sorry. If you have to change it to Bitcoin, change it to Bitcoin, move that Bitcoin to another exchange. That's very common. So in that case, you might want to use LIFO for the exchange that is just simply converting quickly from your altcoin to your Bitcoin. Mm-hmm. So what you're doing is you're kind of guaranteeing that the thing I just put on that exchange is the thing I'm converting to that exchange. So LIFO makes sense there. But does the IRS agree with this? Who knows? I think Guthrie probably has a much better insight into what strategies to use when.
Gotcha.
So I'm sure he can speak better.
Yeah, happy to jump in. And I'll just say, I think at the end of the day, if we were all just to stick with one, it would be spec ID. It's the most flexible. It's the most audit friendly. It's the way to go. No matter what kind of business you're in. I've dealt with cost basis in a lot of regards. I used to manage cost basis for acres of vineyards around the world. And whether it's that or simply cost basis around selling pencils, having spec ID like a way to really do that, gives you that flexibility to be able to tweak your tax liability or tweak your financials in a way that maybe this year we need to appeal more to investors. Let's get our revenue up, or let's mention earlier. Let's go ahead and pay a bigger tax bill, so later on we can worry about less of a tax liability. But in my opinion, if I were to rate my preference. And I think it's obvious. Spec ID is number one. Second would be HIFO, highest in, first out. Third would be because of the nature of the asset, and also I'm extremely bullish. I think we're going to see 100K Bitcoin next year. LIFO, LIFO would be my next best choice here. Simply because you're going to be selling at all times the last purchase asset, and so the difference between the cost basis and the gain you've realized is going to be much smaller. FIFO, I think it's the easiest actually, and it's the most conservative, and I think the IRS they do generally prefer, at least in my experience, FIFO. But it's the least advantageous as a individual or a business. Because if I sell a first in first out Bitcoin from 7 years ago, that's insane. Yeah. I mean, that's especially in December 2017. So I would steer clear from FIFO as much as possible, and I think in all regards, spec ID is the way to go.
Yeah, definitely. From this conversation, being able to kind of dig into each UTXO, figure out which is moving, what the actual cost basis is, what you're selling for. That's definitely the most accurate way. And, to your point, you guys then can say to the IRS, hey, well, this is my strategy. This is how I went about it. And even if they don't believe that was the perfect way of going about it, you feel like that's a good argument to make.
Yeah, they want you to be consistent, and they want you to make reasonable decisions. Your motivation for making a decision cannot be purely economical. Mm-hmm. So when it becomes purely economical, it appears as if you're trying to get away with something. But if you are approaching it from the perspective of consistency and reasonableness, you're probably going to be fine with the IRS. And you have all these records, you're prepared to give that to them. You know what you did. The IRS is not going to be concerned with you. They're concerned with people that are legitimately doing something wrong.
Right. So people who are, purposefully and with intent hiding, misreporting, etc.
Yeah, they're not using our system. They're not trying to pay their taxes. So it's a different audience, really.
Definitely. And so I think the thing that I wanted to wrap up on is, if you're a person who is sitting at your chair right now and you're listening to this podcast or you're watching on YouTube and you think back, well, I've been in crypto a long time, maybe even back to the 2009s through 2013s. And I've potentially years of time where I didn't know what to do, so I didn't. What would be your advice to people in that place?
Oh, it's simple. So in order for you to use Spec ID, or for that case, FIFO, LIFO, HIFO, or whatever, you really need a complete picture of your entire history of trading. So when we get that into our system, going back to what you asked for pricing, our model, which is a yearly model, it's not based on tax year. If you paid $75 today and you have trades going back to 2013, for instance, you get all that. You can download your 8949s for 2013, 14, 15, 16, 17, 18. Like we're not pigeonholing you into, well, you want your 2013, give us another $75. That's not the model we're going after here. It's you can use our system or you cannot use our system. It's not like pieces at a time. So you have to have that historical data in order to understand cost basis. So if we need it anyway, why not just give you the information you need?
Yeah, absolutely. So, I mean, at least for me personally, based on this conversation, I want to go back to the drawing board. I've learned a lot from this. But I definitely want to give Node40 a try and see, try how much it can simplify, take the stress out of it, and, making more educated decisions. I think that I preach that on my social media channels as much as possible. I'm not a trader per se. I'm a developer and a tech dude, but the trades that I do make, it's all about, I want to make the best possible decision because that's the way my brain works. So,
Right.
That's definitely something interesting. So where can folks find you guys? What's your website? And I'll link it up in the descriptions and stuff too.
Yeah, it's node40.com.
Right on.
And you can get everything you need right there. And again, like I said, I'm very reachable. Oftentimes when you call and you schedule like a demo or you just need to talk to somebody, a lot of times I'm on that call. So because I want to know what our customers, what their questions are. The roadmap of our product itself is crowdsourced. It's you say you need something and we find a way to put it into the roadmap. We don't think of what it should do and then we do it. We ask you what does it need to do and then we do that. So the more I talk to people, the better. As a CTO, it's important that I realize what it is our customers need.
Excellent. We'd love to hear that. So other than calling up directly, are there any other ways, like social media? Are you guys active there?
Yeah, we're on Twitter, we're on Facebook, LinkedIn. I think we're pretty much mostly active on Twitter because that's what everybody likes to use.
That's the spot. Cool.
Yeah.
So I'll definitely link you guys up down in the descriptions in the podcast description and on YouTube so people can find you. Folks listening, thank you very much for your time. And I really do hope that you'll check out Node40 and see how they can help you with your personal tax situation if you are indeed looking for a tool like that. So with that, thank you, Sean. Thank you, Guthrie, for spending time here.
Yeah, thanks for the opportunity.
Yeah, thank
100%. Cheers, guys.
Take care.
Take
Bye.
care.